Hello and a warm welcome. You're watching Business at 9 with me, Jude Sanath. Let's slip right into it and take a look at market action from the US markets first. In fact, those markets in the US extended their rally with the S&P 500 and the Dow hitting fresh record highs amid strong corporate earnings and optimism over easing tensions in the Middle East. Now, the Dow surged more than 500 points, while the S&P 500 as well as the Nasdaq were largely in the green. However, SpaceX shares fell over 5% in trade after concerns prevailed over higher AI-related spending weighing in on investor sentiment. In fact, we have my colleague Meryl with a roundup of all that happened on Wall Street.
That's right. So we're seeing the Wall Street has opened quite positively in the green. S&P 500 has hit a fresh all-time intraday high. This is coming in as strong corporate announcements and earnings, as well as the easing geopolitical tensions from the West Asia are seeming to boost investor confidence further. The Dow Jones, if you look at it right now, is up about 1%. It's gained around 600 odd points since the sessions opened, while the S&P 500 is also higher by about 0.2%. Now, all three major indices are on track for their best 5-day performance since April 2025. And supporting sentiment is the expectation that the Strait of Hormuz could soon open up, easing concerns around the global energy supplies. Oil prices as well, if we look at it, have remained largely stable. WTI crude right now is about $75 a barrel. Brent is trading at nearly $79 a barrel, largely flat from where they were in the last trading session. Among individual stocks, SpaceX is under pressure. The shares have fallen down more than 8% after the company reported its first quarterly reports, wherein they saw that capex for the company after its initial listing has jumped now over 6-fold. That's right, capex for SpaceX has reached $18.4 billion, which is largely driven by investments in AI infrastructure. On the flip side, Nvidia has gained about 4% after Elon Musk said that SpaceX will use Nvidia processors almost exclusively for its future AI computing infrastructure, giving another boost to the AI trade on the opposite side. So apart from these, Wall Street is also seemed to be soaring on the back of other announcements. Eli Lilly has also jumped after crushing estimates and raising its outlook. All in all, quite a positive green day for the Wall Street so far.
Well, moving on, the RBI has clarified that Tata Sons continues to remain under an upper layer NBFC under its revised scale-based regulatory framework. In fact, Governor Sanjay Malhotra said the new norms are principle-based and that eligible entities will in fact continue in their respective categories. The revised framework introduces a 1 lakh crore rupee asset threshold for identifying upper layer NBFCs while giving the RBI discretion over the final classification. In fact, we have Anurag Joshi with more details on this.
Reserve Bank of India Governor Sanjay Malhotra has said that Tata Sons is in the upper layer non-banking financial company list. Malhotra commented on the recent norms on scale-based regulations for upper layer NBFCs at the post-monetary policy press conference. The new rules for classifying NBFCs are principle-based, according to Malhotra. Now, to give you recent developments, on June 24th, the RBI unveiled amendment norms on upper layer NBFCs, and an asset size criteria of 1 lakh crores and above is set for upper layer NBFCs. The RBI at that time had said that the compliance with the upper layer NBFC rules will be from the date the RBI notifies the non-banking financial company list. Malhotra at the press conference did not give a lot of details on the list for the upper layer NBFCs, but the June 24th circular sets the final rules on scale-based regulations for upper layer NBFCs.
Moving on to aviation next, Air India has roped in former CEO of Ethiopian Airlines, Tewolde Gebremariam, as its new managing director and CEO as the Tata Group-owned airline grapples with mounting losses and the aftermath of the AI-171 tragedy, which claimed 260 lives in June last year. Now, Gebremariam takes over from Campbell Wilson, who resigned in April. Now, Tewolde is widely credited with turning the African carrier into one of the world's fastest growing and most profitable airlines during his tenure at Ethiopian Airlines. Kuldeep Singh joins in with the details of this announcement.
Well, Air India's board has appointed Tewolde Gebremariam as the new Chief Executive Officer and Managing Director of the airlines. He will replace Campbell Wilson, and the date he assumes charge and the transition schedule will be announced later. The Air India board selected Tewolde Gebremariam unanimously after a global search, and in fact he previously served as CEO of Ethiopian Airlines. Important to note here is that as per reports, Pakistan International Airlines had also shortlisted Gebremariam for CEO role in July. However, as CEO of Ethiopian Airlines Group, he transformed a regional airline into Africa's largest and most profitable airline group. Under his leadership, Ethiopian Airlines revenue increased by over fourfold and the fleet size increased by nearly threefold. He has long experience in airline turnaround, operational excellence, safety, developing global hubs, and building MRO and aviation training infrastructure. As per a statement issued by Air India, the company said that since Air India is now moving out of an initial turnaround phase and entering a period of rapid expansion and profitable growth, in which Tewolde's experience will play a crucial role. N. Chandrasekaran, the chairman of Tata Sons and Air India, said that Tewolde's experience will play an important role in making Air India a world-class global airline. Tewolde, in a statement, said that leading Air India is an honor for him, and his goal will be to ensure world-class service, improved operations, Indian hospitality, and long-term growth as the CEO of Air India.
Right, let's shift focus and take a look at how domestic markets fared today. The Nifty closed above the 24,600 mark. Broader markets surged during the trading session, while FMCG and private bank stocks corrected, even as metals, PSU banks and realty surged. Now, TCS and Apollo Hospitals were the top losers on the Nifty today, and my colleague Harsh joins in for more on today's market roundup.
Well, yes, we closed at the flat line, and has been the case, right? I mean, we've seen bounces back, especially in the last 10 minutes of that changed mechanism of the trading day that we've started to get starting this week, and that obviously impacting markets. We were at the flat line where the Nifty is concerned, more than 1:1 on the advance decline. So clearly the advances outstripping the declines, which was the positive, both on the Nifty 50 as well as on the Nifty 500, even though the broader markets behave much better than the Nifty. Even for a better part of the day, they were trading in the green as well, and that was one of the crucial positives that came out of the day today. Of course, all indices closing in the green, which is a positive. In terms of the big movers, Shriram Finance was the biggest mover on the Nifty 50 index, up 3+%. Other movers, Grasim, JSW Steel, Hindalco also did well for themselves. In fact, the metals pack was shining in trade today, and that shine continues. In fact, you're seeing negative moves on TCS as well as HCL Tech from within the IT pack. So IT was soft, and so was banks, as you highlighted. You had Apollo Hospitals also, which was down around 1.5% in the day of trade today. In terms of the broader market, some very strong movers, of course, as we've seen, and some of them earnings driven. I'll start with the ones which closed in the red. MapMy India was down 8%. Z Entertainment down 5%, JSK Pharma, Aegis Vopak, Bharti Hexa, Zydus Wellness all closing with cuts of over 4% in the day of trade today. Some of the gainers, again, Hindustan Copper from the metals pack, Ola Electric, Engineers India, Go Digit, RR Cable. Some of the insurance stocks were up. QSR was another theme which actually did very well. Jubi was up. Restaurant Brands Asia, again, for a second straight day in the green. You also had Mrs. Bector's and some of the other ones which have actually done quite well over the last few weeks, and that kind of bullish nature on some of those names continues. We spoke with Rides post the numbers as well. That stock too was perked up 4.5% at close. So some real strong gains clocked in. Divyani International from among the QSR pack as well did well. Bosch from the auto pack was the top gainer. Sona Comstar was the other one which did well from the auto pack. So even in sectors, in fact, if I was to switch, metals, auto, realty actually did very well for themselves, while banking, FMCG, defense and IT were the top laggards.
Right, that was harsh with the markets roundup then. But moving on to the top story we've been tracking all through the early part of the day. The RBI today announced that it was keeping the repo rate unchanged at 5.25% as the central banker maintained a neutral stance. In fact, the central banker and the RBI governor rather added that headline inflation remains above target and is well and truly a concern. My colleague Ankur is here with the details.
It's a no-change policy from Reserve Bank of India this time, but a lot of takeaways from the commentary of Reserve Bank of India. First and foremost is the growth and inflation dynamics, whereby Reserve Bank of India has now reduced the forecast for inflation by 10 basis points to 5% for FY27. And in that, Reserve Bank of India clearly mentioning that core inflation is something which looks to be aligned, and if you also reduce the precious metal out of it, it remains well within the range. Apart from that, if you talk about the growth, the guidance has been increased a bit by 10 basis points to 6.7%, but importantly, Governor says that even 7% growth is possible for FY27. Apart from that, there has been announcements on the harmonization of interest rates, and Governor did mention that polymer notes may be available by a Q1 of the next financial year. Governor also stated that as far as the upper layer list is concerned, whereby Tata Sons is awaiting whether it will be there in the list or not. The list is expected to be out soon.
Well, in fact, after revising India's GDP forecast from 6.6% to 6.7% on the back of a resilient economy, RBI Governor told ET Now's Ankur Mishra that we may well hit the 7% mark this year. Listen in.
I want to understand your sense more on GDP front. In last to last policy, of course, the FY27 forecast was 6.9%, then it came to 6.6%, and now we are at 6.7%. Given in the first quarter itself, you are saying 7% growth is possible. Is there a scope of overall 7% growth for FY27 which is possible, considering the fact that the data which has come in the past also has been better than what was forecasted?
The 6.7% growth that we have estimate, the outlook that we have given is an estimate. And we have also mentioned that the risks are evenly balanced on both sides. We also give a fan chart to give, the relative probability distribution. So if you look at the fan chart, it will suggest that there is a possibility that the growth, to answer your question, there is a possibility that the growth may be 7 or more.
In fact, after RBI Governor lowered the inflation rate and raised the GDP projection, SBI's Managing Director Rama Mohan Rao Amara said that he believed that upside risks can't be ignored any longer, but the fact is that India's economy is still well and truly resilient. Listen.
Particularly the very fact that the GDP growth rate has been projected to be even 10 basis points higher than the initial estimate also indicates that India is able to maneuver and we are able to demonstrate our resilience. But the talk of upside risks is only around to caution and kind of preparing the entire ecosystem players that more needs to be done in terms of we can't ignore those risks. And we continue to look for diversification the way it happened in terms of exports, etc., when there was headwinds were there in the trade. I think this is an indication and reiteration that risks are continuing, but at the same time, India's economy has demonstrated resilience.
Well, moving on next, the Society of Indian Automobile Manufacturers, or SIAM, has said that fuel quality testing under the prevailing regulatory framework is a rigorous and a comprehensive process. Sumita joins us with the details of that statement and what it means in the context of the ongoing discourse on fuel.
That's right. Government sources are indicating that government officials have flagged arbitrary dropping of Prime Minister Narendra Modi's videos on Meta's platforms. In fact, this video, remember, was about student outreach post the selective enforcement, in fact, on Meta's platforms. Remember, this is coming in after Meta's global Government Affairs President Joel Kaplan met with India's MeitY Secretary or IT Secretary S. Krishnan. Of course, he had conversations and a 45-minute-long meeting with India's IT Minister Ashwini Vaishnav. What we're given to understand from government sources is that the team has conveyed Mark Zuckerberg's apologies with respect to CSAM content on the platform, deepfake content, along with some of the other matters which are related to operations on the platform. In fact, the center has told Meta that it does not qualify as a neutral intermediary. The government has reiterated safe harbor protection under IT Act will not be applicable if these issues persist. In fact, what we are also given to understand from government sources is that Meta admitted certain categories of content that is boosted. In fact, Meta apologized and expressed regret over the lapses, particularly with respect to Prime Minister Narendra Modi's video, which was temporarily taken down. Meanwhile, the company has maintained that it does not deliberately allow misuse of its platforms. Of course, there is a statement which has also been issued by Joel Kaplan. He is the company's Chief Global Affairs Officer. He has said that he apologized to the Minister Ashwini Vaishnav, on behalf of Meta, and this was with respect to the matter or the error restricting to Prime Minister Narendra Modi's post. Remember, ever since this matter broke out, Meta earlier issued apologies as well with respect to briefly restricting Prime Minister Narendra Modi's video on Facebook. In fact, back then, when the company had issued an apology, it said that that happened in error. It was a technical glitch that really led to that kind of an error happening from the company's side. And of course, the Prime Minister in his videos was assuring students of stricter action to curb paper leaks, and he had issued that video during CGP protests, and it was a message to Gen Z. Of course, tomorrow as well, we do know that the team is going to be here, the global team that is comprising of the Chief Global Government Affairs Officer for Meta Global. He's going to be here along with other members of his team. They also have Indian members as well. And of course, we will be closely following all the developments pertaining to the team's visit to India.
Well, a whole lot of acrimony then between the centre and Meta, especially over the issue of child sexual abuse material, as well as the controversy over the temporary takedown of Prime Minister Modi's video, especially in the context and at the time of the CGP protests at Jantar Mantar. But moving on then, the Society of Indian Automobile Manufacturers, or SIAM, has said that fuel quality testing under the prevailing regulatory framework is a rigorous and a comprehensive process. Sumita is back with us to take us through the details of what exactly that statement means and the context in which it came from.
That's right. Reacting to media reports suggesting fuel contamination, SIAM has clarified its side of the story, and they have come out with a response. This response was shared late last evening. In fact, SIAM says that selective excerpts without full context has been shared as far as these stories are concerned. On fuel quality, SIAM says that fuel quality testing under current framework is rather comprehensive, and it's carried out by OMCs. It also says that this communication that's been shared by industry members, it's part of a routine technical discussion among SIAM, OMCs, OEMs, and testing agencies, which really happens. And of course, the sulfur and chloride figures that have been reported, they would require further authentication. In fact, SIAM goes ahead to say that OMCs have strengthened their monitoring, and that includes a water ingress test 8 to 12 times a day. And that really covers 87,000 fuel outlets. In fact, the letter also, or the communication also suggests that OMCs have told SIAM that checks have been instituted, and it once again reiterates its full support to the government's E20 program, and it says that there is no cause of public concern as these issues which crop up, they have been routinely addressed. Remember, this is coming in after the oil ministry yesterday came out with a clarification suggesting that fuel quality is being monitored on a regular basis. In fact, the ministry also said that there are advanced and elaborate testing protocols that are already in place. And in fact, as far as numbers are concerned, it mentioned that checks have been instituted, and that including water ingress testing 8 to 12 times a day in over 87,000 outlets. The same thing that Siam was also mentioning. They also say that over 200 samples have also been tested for chloride and sulfide.
Moving on, India's sugar sector is quickly moving beyond its traditional market strongholds, this even as the government's E20 mandated ethanol blending takes form and shape. And that's got traditional long-time sugar players, much like EID Parry or Balram Chini, or for that matter even Praj Industries, now diversifying their business into lucrative avenues to reduce their exposure to the cyclical nature of the sugar business itself. In fact, my colleague Ashesha joins us with more on this story.
Well, yes, the sugar industry clearly is undergoing a transformation, and most of the listed sugar companies are now translating from traditional cyclical businesses, and they are now venturing into other businesses as well, because the cyclical sugar industry continues to remain a pain point because it is highly cyclical in nature. It is dependent on weather conditions, which continues to remain very erratic, which continues to weigh heavy on the financials of these companies. Sugar sector, remember, is also heavily regulated, whether in terms of pricing, whether in terms of exports or any other matter for that matter, which is why these traditional sugar companies are now diversifying away from cyclicality into other businesses. We did talk about weather and monsoon risk, which continue to persist, which weighs heavy on their earnings. So these are the three factors which continue to remain at play. Let's also talk about the other opportunities that these sugar companies are now identifying. They are now getting into more and more ethanol production, which the government is now promoting. The E20 program has now boosted demand for most of these distillery companies, which were traditionally sugar companies. Assured ethanol offtake by oil marketing companies on account of government's push on higher ethanol blending is another factor which continues to remain at play. Remember, ethanol has better margins as compared to traditional sugar business, so that is another thing that is more lucrative for the company, and efficient use of byproducts is also another important factor to watch out for. Let's also put the spotlight on some companies which have diversified. Let's put the spotlight on Balrampur Chini, where the company has now gotten into PLA bioplastics. EID Parry is now into FMCG and staples businesses, and Praj Industries is into data centers, SAF and compressed biogas. So clearly, these traditional sugar businesses are now diversifying into several other businesses.
And staying with the business of food, in a major regulatory crackdown on food adulteration, the Food and Drug Administration in Maharashtra has imposed an immediate statewide ban on the manufacture, storage, distribution, transportation and sale of analog or artificial paneer for a year. Now, under the leadership of FDA Commissioner Tukaram Munde, inspection teams will be conducting surprise raids on food businesses, suppliers and catering outfits. Establishments caught stocking or serving analog cheese as paneer are expected to face severe penalties, including confiscation of goods and legal prosecution under the Food Safety and Standards Act. Let's listen into what the FDA Commissioner had to say.
2006, Food Safety Commissioner of the state are empowered to take action as per Section 30 also. Particularly, Section 30, Clause 2, Subclause A, which empowers the Food Safety Commissioner of the state to prohibit certain food item for a particular period, particular geography, 1 year at a time maximum. और वो पावर के हिसाब से महाराष्ट्र में पहले से ही गुटखा या अनुषंगिक जो प्रोडक्ट्स है, फूड प्रोडक्ट्स है, आइटम्स है, उसमें प्रोहिबिशन है. महाराष्ट्र में because there is a issue, analog paneer का एक issue जो है, that is about, and there is a issue of health concerns by consumption of it, because it is made up of non-dairy products, and the test results of last 1 year during the 2025-26 ये साल में उनकी टोटल हमने जो सैंपल ली थी उसमें से लगभग 35.4% जो सैंपल्स है उसमें अनसेफ है, सबस्टैंडर्ड पाया गया है.
And my colleague Akanksha is here for more on that developing story on the FDA ban in Maharashtra.
Well, yes, that's right. Maharashtra has imposed a one-year ban on the manufacture, sale and distribution of the analog paneer or non-dairy paneer across the state. And yes, of course, it's a major crackdown that is being taken on the fake dairy products. Now, it's important to note that under the law, such prohibition can only be imposed for 1 year at a time, and which is why the current ban is valid only for 1 year. Now, the order applies to every food outlets, hotels, restaurants, food delivery platforms, caterers, cloud kitchens and all other food business operators across Maharashtra. Now, according to the Maharashtra FDA Tukaram Munde, there are currently no prescribed standards for analog paneer, and which is one of the key reasons behind taking this decision. Now, in fact, the FDA has also directed all food businesses to strictly follow the packaging and labeling norms for the dairy paneer. At the same time, citizens have been encouraged to report any violations related to analog paneer through the Maharashtra FDA's free toll number. Now, however, the ban does not apply to tofu or soya-related products, and their manufacture and sale will continue as before. Now, lastly, the Maharashtra FDA has strictly told that strict actions will be taken against all the food entities, including food delivery platforms, hotels, and restaurants, if they are being found violating the rule.
Well, with that, it's a wrap on Business at 9. Thanks so much for watching. The news and updates on ET Now will, however, continue, so keep staying tuned. But for the moment, it's goodbye from us.